So I hope everyone is good and everyone is preparing very well for the upcoming examination. One thing I would like to say, just revise all the lectures I have taken here, because all the lectures you will get multiple questions, and that all are very important from the exam point of view. So you also find a playlist from the YouTube channel of the Officers Adda 247 YouTube channel. So start this session with a beautiful quote, that is, you are the best, you can do it. Today is your day. God is always with you, and you are the winner. Okay. So just remind every morning with these 5 lines, and I hope every day that you just feel something different in you. And so let's start this session. One update also from my side, that is for your upcoming examination, which is scheduled from 26th February. Okay, so you can just enroll in the revision batch, as well as you can enroll in the MCQs batch, where I am your AP faculty, and I will just explain you 1,000 possible questions related to your accounting paper. And meanwhile, you can just get a 3,000 questions, possible questions related to your JAIIB examination. So you can enroll in these two batches for clearing the JAIIB examination in a single attempt. Okay, so you can use the code Y422, and with this code you will get the maximum discount at every batches, at every JAIIB and CAIIB products. Okay, so just start this session with the first question. So the first question, that is related to your ratio analysis question, and this is a very important question if I say in terms of the examination. Okay, so here you have to tell like inventory turnover ratio. Like I always explain, in ratio analysis you never have to memorize the formula of the ratios. Okay, so you only have to formulate by your own. Like here you have to find out inventory turnover ratio. Okay, so we know that inventory, we generally say inventory is our stock. Okay, and turnover, that means that related to your sales of your company, right? Okay, but in considering of the, instead of considering the sales of the company, we consider cost of goods sold while calculating the inventory turnover ratio. Okay, so if I say what is the formula of the inventory turnover ratio, that is your cost of goods sold, and it is divided by the your inventory, that is related to your stock. But we just understand that stock that comes two times, like first is opening stock and another one that is closing stock, right? Okay, so instead of writing the stocks, we consider it average stocks. Okay, so like here we have to find out the cost of goods sold and average stocks. Okay, so we know that what is the formula of the cost of goods sold, that is your opening stock, plus net purchases. Okay, what we understand by the net purchases? Net purchases basically whatever you purchase, like you purchase, suppose that 3,000 quantity of any product. Okay, and you just return 1,000 quantity, like 1,000 quantity that is useless for you, or say that is bad quantity for your company. So just you just return that 1,000 quantity. That means now available quantity you have, that is 2,000. So that is basically known as your net purchases, right? After that, we consider the direct expenses. Direct expenses that lead to your actually factory related expenses, or say product related expenses. Okay, so whatever the expenses incurred on the product for just in the production purposes, so that all consider under the direct expenses. Okay, like suppose that for making any product you have to just pay the labor charges, so that also your comes under the direct expenses, labor charges, raw materials. Okay, and suppose that for raw materials, to just raw materials from the supplier into your factory, you just paid the transport charges, so that is also understand as your carriage inward. Okay, so that carriage inward is also the part of your direct expenses, right? So we consider the opening stock plus net purchases plus direct expenses, and minus that is your closing stocks. Okay, so if we have to calculate here, that is cost of goods sold, we have to just opening stock plus net purchases that is 46,000. So how we can just calculate the cost of goods sold, that is 18,000. After that, net purchases, that is 46,000 plus direct expenses. Look, if you're talking about the wages, that means, just a 1 minute. Look, understand. First thing, you also have to understand what we understand by the direct expenses, because this is also important. Direct expenses, like suppose that we are just producing a product, or say we are just manufacturing a product in our factory, okay, and from manufacturing to producing that product, that whatever the expenses incurred on that product, that all considered as a direct expenses. So suppose that you have to pay the charges to the labor, so that labor charges is generally considered as a wages. Okay, so wages we give to the laborers, and salary we give to the employees. Okay, so if sometimes the question is also from this, like salary is a kind of which expenses. So salary is a kind of your indirect expenses. Okay, that is indirect expenses. So whatever the expenses that incurred into your factory on particular product, that is called your direct expenses. And whatever the expenses that incurred in your office, okay, so that considered as your indirect expenses. Like if I am talking about carriage inward, okay, so like here in this question carriage inward is given. So if we are talking about carriage inward, that means carriage inward we considered as a direct expenses, because we paid transport charges for raw material, or say for product, from supplier into your factory. Okay, so this is your factory, and this is the supplier from where you just import the products, or say raw materials from the supplier. Okay, so whatever the transport charges incurred on this scenario, so that all called carriage inward. Okay, so that's why carriage inward we considered as a direct expenses. Okay, if we are talking about carriage outward, suppose that we are talking about carriage outward, that means now carriage outward is considered as your indirect expenses. That is called your indirect expenses. In the simple term, from manufacturing to from manufacturing to production stage, whatever the expenses incurred on that particular product, that is called direct expenses. Otherwise, all the expenses that called your indirect expenses. Okay, so now if I'm going to say that is how we can calculate the inventory turnover ratio, so we know we have to calculate the cost of goods sold and average stocks. Okay, and cost of goods sold, how we can calculate the cost of goods sold, that is your opening stock, which is 18,000, plus net purchases, which is 46,000, plus here wages and carriage inward, which is your direct expenses. So this will be your 14,000 plus 4,000 and minus closing stock, which is given 22,000. Okay, so if we are going to solve this, you will get the value of the cost of goods sold, which is equal to your 60,000 rupees, right? So you have to just write here 60,000 rupees. And now if you're talking about average stock, how we can calculate the average stock, that is equal to your opening stock plus closing stock divide by the 2. Okay, so this is how you solve the average stock. So here 18,000 plus 22,000 divide by the 2, and that will be equal to your 20,000 rupees. Okay, so just write here 20,000 rupees and you will get the answer. So just write answer of this question, that would be your 3 times. So either say 3 is to 1 or say 3 times. This will be your right answer from this question. So look, in the ratio analysis you will find in these type of the questions. So this is the way you can solve. Okay, now understand another question. So another question that is related to your bank reconciliation statement. So here the favorable balance that is given as per the cash book, which is 5,000 rupees. So whenever how we can solve the bank reconciliation statement question, just tell me the answer of this question. So while I'm also explaining in this. Look, whenever the cash book balance is given, you understand you have to calculate the passbook balance. So cash book balance which is given 5,000, so just write here 5,000. Okay, and debit side of the cash book undercast by the 2,000 rupees. That means, look, first thing what you have to do, you have to write here passbook and here the cash book and passbook. After that, circle this and circle this. Okay, for better understanding. So debit side of the cash book undercast by 2,000 rupees. That means by mistake you just record the value in your cash balance less than the 2,000 rupees. That means this will be your minus 2,000 rupees. While for this transactions, passbook or bank statement would be 0. So in this case, your passbook balance would be greater than your cash balance. So what will be the, how you can write this? Look, if it is greater than the, if passbook balance is greater than the cash book balance, that means you have to use the figure that is plus, positive. Okay. And by what value? That would be 2,000 rupees. After that, the another thing that is given here, check deposited into bank 3,000 dishonored, but no entry for dishonor is made in the cash book. That means you deposited a cash into, like you deposited 3,000 rupees into the bank, but bank dishonored this. So bank dishonored this, but no entry for the dishonored is made in the cash book. That means it is 3,000 for your cash book while 0 for the passbook. That means now your passbook balance is greater than or less than the cash book balance. It is less than your cash book balance. So just if it is less than, so use the minus figure, and by what amount? That is 3,000. So what would be the balance as per the passbook? So the right answer, that would be yours, 4,000 rupees. So that's how we solve these kind of the questions in the exam. Okay, I hope it is now clear for everyone, right? So whenever the cash book balance is given, just write here passbook and thus just make the table like this, and you can solve the question like this. Okay. Another question, that is bonds, where the bondholder has a right to cash in the bond before its maturity date. This is a very important question. If I say, look, what we understand by the bond. Bond is a, look, this is a bond, okay, and bond generally issued by the government or say corporations, okay. So bond generally uses by the government or corporations to raise the funds. To raise the funds for what? Suppose that government want to the government want to just for the road infrastructure, government want to use the fund for making the hospitals. Okay, so whatever the purpose is, okay, so government and corporation just issues the bond, and that bond has face value and some coupon rate. Coupon rate what? Coupon rate is basically the interest rate which is given on the face value of the bond. So whenever you find any question related to bond, you have to understand that is face value and the coupon rate, which gives you the annual interest of the bond. What is you earned? Okay, so annual interest earned, it is also known as. So bond basically purchased by the general public. Okay, so like bond purchased by the general public, and from general public, if they purchasing the bond, that means the money simply goes to the government or corporations who issued the bond, right? Fine. And for this bond, some maturity period is given, like suppose that the bond value which having the face value of the 5,000 rupees and a coupon rate which is 10% and the maturity period which is 3 years. That means for the 3 years, look, if I say what the annual interest on, so the annual interest, that would be of 500 rupees, right? That means for every year the investor, these are known as the investor because they are investing the money into the bond, by which the public or say investor is getting the interest as well as the principal at the maturity time or say at the maturity date. Okay. Okay, so for the first year, if I say for the first year, the 500 would be received by the investor. For the second year, again the 500 received by the investor, and for the third year, again 500 rupees received by the investor, as well as the, because the bond have a maturity period of the 3 years. That means for the third year, that investor will receive interest as well as the principal amount, which is 5,000 rupees. So this is the basic concept behind the bond. I hope it is clear for everyone. So the question is, when the bond where the bond holder has the right to cash in the bond before its maturity date, so it is called as, so the correct answer, that is putable bond. Okay, so it is known as the putable bond, or you can also say that that is put bond. So it is a type of the bond that provides the holder of a bond, holder of the bond, who is known as the holder of the bond, say holder of the bond or say bond holder, it is a similar. Okay, so holder of the bond, who just in or border holder of the bond or say investor. So it is a type of a bond that provides holder of a bond, that provides the holder of a bond the right but not obligations, okay, to force the issuer to redeem the bond before its maturity date. So the bond which is called putable bond, where the bond holder has the right to cash in the bond before its maturity date. So this will be your correct answer in terms of this question. Okay, I hope it is now understandable for everyone. Next question, that is goods worth of 10,000 rupees were withdrawn by the proprietor for his personal use. So the account is to be credited is. So which account should be credited? You have to tell here, right? So look, how we solve these kind of the questions in the exam. So suppose that like goods worth of 10,000 rupees, that means this is the owner and this owner's and this is owner's company, and due to business entity concept, both are the different entity. Okay, like it is known as the artificial personal account and it is known as a natural personal account, right? Okay, so if this person, or say this is the owner and this is his company. Okay, so if the owner just withdraw 10,000 rupees of the goods from the company for the personal use. So what journal entry generally make for this transactions? So look, if we're talking about if the owner just withdraw some amount from his company, that means what possible account can be included is, that is drawing account. Okay, we use the drawing account, that means drawing account should be debited, while because purchase is now reduced, so purchases account should be credited here. So this is the question, this is the answer of this question. So whenever in the exam you will get the question like, if the goods worth of, or say just amount were withdrawn by the proprietor for his personal account, so every time you have to just debit the drawing account. Okay, that is known as your drawing account. Whenever a owner just withdraw from his company, okay, so then for the personal uses, so that amount goes into the drawing account, that is known as your drawing account. Okay, so drawing account would be debited, while because this is your, like suppose that you purchase the amount for the 50,000 rupees for your company. Okay, and 10,000 you actually use in your company, that means your purchases also just reduced by the 10,000 rupees. So purchase account, that would be your what, that would be your credited. Okay, so this is how we just solve these kind of the questions in the exam, how we make the journal entry for that transactions. So debit account should be debited while purchase account should be credited in this question. Okay, I hope it is now clear for everyone. So if the question the account is to be debited by, so the answer will be drawing account, and if the question is the account to be credited is, so the answer will be the purchase account. Okay, next question, that is what does debit signifies in the accounting? So whenever we are talking about like bookkeeping. Okay, so we use the, if we are talking about the bookkeeping, we just use the debit and credit, like every debit entry has its credit entry. Okay, so if we are talking about what does debit signifies in accounting, so debit, that signifies an increase in the assets. Okay, so what we understand by the debit in the accounting, that is it increase in an asset, it increase in an expenses, it increase in an owner's drawing. It increase as an owner's drawing. Okay, owner's drawing we understand for his personal use. If the owner just withdraws some amount or say some amount or some goods from his company, that is known as a drawing. Okay, so whenever you are just talking about a term that is debit, debit means it will increase as an asset, it will increase as an expense. Why expense? Because if you're talking about, so understand this, suppose that you are purchasing the asset, okay, and purchase is a kind of the expenses, so expenses is also increases. So you can understand like this way, okay, as well as the owner's drawing, that will also increase, while your liability of the company will decreases, right? Liability of the company decreases, as well as the revenue decreases. This is very obvious to understand. Your revenue will be decreases, as well as the owner's equity, which is also known as a capital, or say shareholders fund, which is also decreases, right? So that is basically definition of what does debit signifies in an accounting, and this is a very important question in terms of the exam, so just understand this. Okay, so if I have to choose the options here, so the four options are given here, so the correct answer that will be your all of the above. Okay, like increase in the asset, decrease in the liability account, decrease in the capital account, all options are correct here. So the correct answer that is all of the above. Okay, so I hope it is clear for everyone. So that's all for this session. I hope this session is useful for everyone, and if you are liking our effort, please do not forget to hit the like button on this video, and if you are not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the important lectures as well as the notifications of the important news that is related to your examination. Okay, so thanks for watching me here, thanks for joining me here, and like this video, and if you're liking our effort, and if you're liking our effort, if you're liking our content, and share this video to your friends and subscribe the channel for getting the more updates.